Welcome back. Today is July 9 and I would like to talk about a tiny company called Apple. Why Apple? It's because, as I wrote in today's comment at the very end, let's scroll down, we can see here that on the E-mini that the market is trying to bounce. So since Apple is a big size of the market, I suspect that Apple, which is here, you see here, is pulling back on the lower part of its envelope. I suspect that Apple is going to bounce. Okay, how can we study Apple? First, you can see here that Apple is in an uptrend. But since in the past few months, in the past 100 days, you can see that Apple has weakened, especially in the past months. Does it mean that we are going to break down, or are we going to continue up? Well, I don't know. So the best is to calculate the probability for each move and each of these trends. Okay, so let's first go and study the trend. Here I cropped the trend here, so we can see here that I am very good at this. I am very good at drawing lines. If I draw a line here, we can see that the upper boundary of this trend is quite above the chart. Alright, while the low boundary of this chart is around 125. Okay, so we can see here that we are almost breaking below this trend. Of course, the trend is not exactly 125. It could be a little bit lower, a little bit higher. This is not a precise science. Okay, so what we have to do now is to try to test this larger trend, or try to test this trend here, which could be maybe a sideways or a small downtrend. Okay, so the first thing is to go look at the pyramid. Where is my pyramid? Okay, where is the pyramid? Yes, it's here. Okay, this is the Apple pyramid. We can see that the market is slightly negative. We expect a very slightly pullback in the next 5 days. The sector is rather negative, it's in short mode, but if the market is going to bounce, Apple could attract some money. Why? Because the selling bias here, the supply is quite positive, and you can see here that large players are not selling. Even if we are pushing down here, large players are not selling. So this indicates that something is probably happening to Apple. Okay, the next step is to look at the supply level of Apple. Okay, here is the supply level. What do we see? We see that the price here is in the very stable environment, is below 10%. So there is no real pressure on the selling side. Of course, if we go below 120, then all these shareholders here will start selling, and suddenly the stock price will drop. That's for sure. But at this stage we are stable. The only negative point is that you see the lower boundary, which is the lower limit of the trend, is higher than the price. It means that the price broke below the lower boundary, and the lower boundary, as we saw earlier, is 125. But okay, there is some flexibility. It's the selling will really start only if we go from here. So I still believe that this is a good place to start buying. So the next step is to open the breakout calculator and try to study the different hypotheses. Here Breakout Calculator. So I will first download Apple. Okay, and I will say this is a long trade. Okay, so I will try to test the 2-year trend. I will say that we are oversold because we are pulling back down to the lower part of the envelope, and you can see here that the lowest of the envelope is minus 2.77%, lowest of the price, and the envelope is 2.5%. So I will trade a pullback on the lower part of the envelope, minus 2.5%, with a 2.5% stop. Okay, positive. Okay, everything is green, great. So this is an interesting trade. So you can see the entry price is 122.32 and we close at 122.57. But if we have a gap up today when the market opens, then of course Apple will open higher. So what would be the limit of this trade? So for that we only need to use the sensitivity analysis. You can see we try different entry levels, and from an entry level that is 6.5% lower than the 5 day moving average, we can see that the risk return ratio is already positive. Okay, so we can see here we are already closing at 122.5. So this we can see that if, let's go back to the price. Okay, we close at 122.57. Okay, so if we open higher than that, then you see that the trade probabilities start to diminish, to decrease. So it's really best not to enter the trade higher than 122.95. Most probably not higher than 1.23. 123. Okay, that is our mark. Good. So what we can also do is to test this ID, but only for 100 days. Does it work for 100 days? Okay. Why 100 days? Because we saw that the stock is pulling back here. You see, in the 100 days, the stock is pulling back. So does it still make sense to buy just at the lower part of the envelope? Okay, we can see that it still makes sense. It's not as good as the test on 500 days, but still it's positive. It's not extremely positive though, huh? And the sensitivity analysis tells us that indeed on the past 100 days you can see that the price didn't pull back lower than 2.5% below the 5 MA. So okay, I think it still makes sense even in the short term to buy Apple, but we can also test a short trade. I type short. I would say that I will short an overbought situation, even though I know it's minus 2.5%, and I will short. Here I have to erase this stop level, and I think we can launch the calculation. Okay, we can see that shorting down the envelope is not good. Okay, we knew it already. So let's try the sensitivity analysis. The sensitivity analysis tells us that you can short only if we are really high at the top of the envelope, which is not the case. So this small study tells us that it's okay to buy at the lower end of the envelope. Let's go back to the price here. So if I take 3 months, you can see it's okay to buy when we are really at the low side of the envelope, and short if we are above here. This is basically tell us what to do in the next days. So today I would be a buyer at 123, not higher than that, and I will be a short seller if we go up to 128. Thank you. Bye bye.